All right, let's get right into it. We all think we know what inflation is, right? It's when the price of, gas, groceries, all that stuff, it just keeps going up. But that's just the story on the surface. That's inflation's public face. Today, we're going to pull back the curtain and look at its secret identities. I mean, what if inflation isn't just some random side effect of the economy? What if it's also a way for the government to raise money without ever actually sending you a bill? What if it's kind of like a bug in the software of our tax code that secretly makes your tax bill higher? And maybe most importantly, what if it's a huge warning sign about a much, much deeper problem with government debt? So let's start with reveal number one. To really get how inflation can be a hidden tax, we first have to talk about how governments can, well, literally just make money. The key word here is seigniorage. Now, I know it sounds super complicated, but the idea is actually pretty simple. Imagine it costs the government, say, 5 cents to print a crisp $100 bill. That $99.95 in difference, that's pure profit. This profit, which they get just by creating no money out of thin air, is what economists sometimes call the inflation tax. Okay, so how does this end up being a tax on you? Well, it's basically a four-step process. First, the government needs cash to pay for stuff, so it creates new money. Step two, that new money gets added to all the money that's already floating around in the economy. Now, Basic Economics 101, when there's more of something, each one is worth a little less. So step three, the value of every single dollar, including all the ones in your wallet and your bank account, goes down. And step four, the government gets to spend its brand new, full value money, while the value of your old money has been quietly drained. That loss of purchasing power, that's the tax. You never got a bill, but believe me, you paid it. And look, this isn't just some abstract theory. Take a look at this real-world data from Italy. Back in the 60s and early 70s, about 10% of their government's revenue came from this seigniorage, and inflation was running around 4.7%. But then, in the years that followed, they started leaning on it a lot more heavily. Revenue from seigniorage jumped to 16%, and, well, look what happened to inflation. It shot up to over 16%. It's a textbook example of that direct link.
Okay, so inflation can be a hidden tax, but that's not all. It also acts like a glitch, a bug in our existing tax system, causing it to malfunction in ways that cost you even more money, often without you ever noticing.
This glitch actually has a name. It's called bracket creep. So imagine you get a 5% raise at work to keep up with 5% inflation. Great, right? Well, on paper, you're making more money. But in reality, your ability to actually buy things, it's exactly the same. But here's the problem. The tax system doesn't see it that way. That raise, the one that just kept you even, might be just enough to push you into a higher tax bracket, which means you end up paying a higher percentage of your income in taxes, even though you aren't actually any wealthy. And this slide really gets to the heart of the problem. Our tax code is written based on nominal dollars. It looks at the number on your paycheck, not what that number can actually buy you in the real world. That gap between your nominal raise and your real raise, that's where bracket creep gets you. But bracket creep isn't even the craziest glitch. The next one messes with your savings and investments. And the effect here is so bananas that the tax on your investment gains can actually be more than 100%. Yeah, you heard me right, over 100%. Let's walk through this one, because it's a real mind bender. Let's say you invest $1,000 and it earns a real return of 2%, so that's $20. But during that same time, inflation was running at 6%, which creates another $60 of growth, but only on paper. So your total nominal gain, the one the government sees in taxes, is $80. Now the tax man comes calling and takes a 25% tax on that $80 gain, which is $20. So what are you left with? Well, your real gain was $20 and you just paid $20 in taxes. Your real after-tax gain is zero. Nothing. You paid a 100% tax rate on the money you actually made. You were taxed on a phantom gain that was created purely by inflation. And this system glitch doesn't just hit us as individuals. It messes with business decisions too. You know, the tax deductions that businesses get for their equipment wearing out? Those are based on what the equipment originally cost. Inflation just eats away at the value of those deductions over time, which makes it less attractive to invest. The same exact thing happens when a business tries to carry over a loss to offset future profit. Okay, for our third and final reveal, let's zoom out. We've seen how inflation messes with the system. Now let's look at how it can be a symptom of the system itself being under enormous stress, specifically from massive government debt. And the starting point here is pretty straightforward. The U.S. national debt, when you compare it to the size of the whole economy,
is at levels we just haven't seen in generations. And that creates a ton of pressure on the people making the big decisions.
And all that pressure can lead to something called fiscal dominance. This is basically what happens when a government's borrowing gets so huge that it starts calling the shots for the central bank. The central bank might want to raise interest rates to fight off inflation, but it can't. Why? Because raising rates would make the interest payments on the national debt totally unmanageable. The government's need to spend and borrow starts to dominate, and monetary policy just has to go along for the ride.
And don't just take my word for it. Former Fed Chairman Ben Bernanke put it pretty bluntly. He said the country has a choice. We can either fix the budget problem carefully, thoughtfully, or we can wait until a crisis forces a really fast and painful adjustment on us. The big risk here is that the painful adjustment he's talking about could be a massive wave of inflation.
The absolute worst-case scenario from fiscal dominance is, well, it's genuinely terrifying. It's what's known as a run on the dollar. Now, this isn't like a bank run where you see people lining up at ATMs. It's more of a slow-motion crisis where investors, both here and around the world, just lose faith that the government can pay back its debt with dollars that are actually worth something. They start scrambling to get rid of their dollars and government bonds, trading them for real stuff, which just drives the price of everything through the roof.
So you've got all these deep, complex forces at play. But when this stuff gets debated out in the open, all that complexity gets flattened into a simple, political blame game.
And usually the whole debate boils down to two competing stories. On one side, you have the argument that it's all about excessive government spending driving prices up. On the other side, the finger gets pointed at so-called corporate greed, with big companies using their power to hike prices. And as you can imagine, what people believe often just depends on which of those two stories they're hearing the most.
But as we spent the last few minutes seeing, the reality is just so much more complicated than either of those talking points would have you believe. It's not just one thing, it's a whole mess of interconnected problems. So when you pull it all together, you can see that inflation wears a lot of different masks. It's a hidden tax that raises money for the government by devaluing your cash. It's a glitch that messes up the tax code with bracket creep and taxes on phantom gains. It's a warning sign, a symptom of potentially unsustainable government debt. And yeah, finally, it's a political football just getting tossed back and forth in a blame game that misses the bigger picture.
Look, understanding all these secret identities doesn't really give you any easy answers. But it does give you a much better set of questions. So the next time you hear a politician or a pundit talking about inflation, taxes, or government spending, you'll be able to see beyond the surface-level arguments. You'll be able to see the hidden machinery working underneath it all.